tell you guys a quick story. One of the most interesting canaries in the coal mine of all of this was 2 days ago and what happened to Facebook. And this sort of ties a lot of this stuff together in terms of like economics, inflation, asset prices, equities, tech. Then we can try to talk about non sort of, big tech. But everybody was saying, oh gosh, the market's going to rip on the open. We were closed for Juneteenth. And then on Tuesday, the market, the S&P was up like 250 basis points, 2.5%. And the NASDAQ was also up, call it maybe 300 basis points, roughly. But Facebook was down like 400 points, right? So it's a big spread. And why is that? And I was like, this makes no sense to me. What is going on with this price action? Everything was up. Apple was up. Google was up. And so I called around and, I was like, why is this happening? And this is the best explanation I got. When you look at who the incremental buyer is in the stock market, it tends to give you a sense of whether prices can go up or will continue to go down. And the poorest informed buyer tends to be retail. And the most informed buyer tends to be these very large institutional hedge funds, right? So there's a spectrum. And Facebook is an example of of big tech that is poorly owned by retail. So it's mostly owned by smart money. And the case that smart money makes for owning Facebook is that it's got an extremely cheap price to earnings ratio. So you must own it. And what they said was that they, looking at the tea leaves of consumer demand, what they actually re-underwrote was that actually it's not that the price to earnings was cheap, it's that the E in PE was just wrong. And if they pass through all of these increases in inflation and their earnings expectations into Facebook, it's actually more like fair value at a lower price. That's why they sold it so much on a day where the market was up. Now, why is that important? Well, eventually you're going to touch all these other stocks as well that are going to go through earnings revisions in this recession. This is where I think Wall Street has done a very poor job on behalf of retail. If you look at the average estimates of earnings, you will be shocked to hear that Wall Street actually has this year being record earnings, next year earnings continuing to go up. How is that even possible?
Well,
how is that? If you're sitting here, how do you see earnings continuing to go up into these prints like this when you cannot pass through, 80, 90% increases in energy and COGS and whatnot? How does that happen?
I think what people would say is maybe they're going to lower their costs. And so with layoffs and lowering salaries and lowering spend on advertising, the E could go up if people start belt tightening, and then we start having companies that are being run, just more
you'll have
for
to
the
sell
bottom
fewer.
line.
You'll have to sell fewer things because there'll be fewer people with jobs to buy things.
But we have 10 million job openings. So this is the weird thing about this recession is because we haven't let a lot of people immigrate into the country.
But is that what you think the consensus view on Wall Street is? That basically a bunch of people get fired, and so that's why earnings continue to go up?
Well, they stop hiring for 2 years in advance, right? Facebook said they were hiring for like 2024. Their hiring plans were looking out 2 years. So now if they go on a hiring freeze, maybe there's, and that's their number one cost. I'm just putting out a theory.
I'll give you the counterfactual. I think Wall Street's wrong.
Okay.
And I think that earnings are going to go down this year and will definitely go down in 23. And so I think what probably happens is the entire world of equities needs to get repriced at a lower price. And in that, it's going to put enormous pressure on these cash-burning, non-profitable tech companies.
Well, that's for sure. But in the ones that are profitable, Chamath, they're aware of this. Facebook just canceled like 2 of their prototypes they were working on to save money. So that whole $10 billion into VR, I think they're trying to make that number look smaller